Hey everyone, welcome back to Corporate Decoder. Today, TDI Emerging Markets Equity Fund just filed its semi-annual report, and I'm seeing a diverse portfolio but a key risk to watch. Quick note, this is not financial advice, just my take on public filings for educational purposes. This fund is investing heavily in emerging markets, which can bring big rewards, but also big risks. This is a report about the DWS Emerging Markets Equity Fund, and it covers the 6 months that ended on the 30th of April 2026. It gives us a look at what the fund invested in, how it performed, and some of the costs involved. Let's start with the costs. For a hypothetical $10,000 investment in Class A shares, the costs for these 6 months were about $63. That works out to 1.16%. For Class C shares, it was a bit higher at $104, or 1.91%, and for Class R6 shares, it was about $50 or 0.91%. Class S shares cost around $54 or 0.99%. Finally, for institutional class shares, the cost was also about $50 or 0.91%. These are important to look at because even small differences in costs can add up over time and eat into your returns. Now let us look at some key statistics for the fund. As of the 30th of April 2026, the fund had net assets totaling over $73 million. It held 73 different investments and the portfolio turnover rate was 29%. This means that the fund managers bought and sold about 29% of the fund's holdings over the year. What did the fund invest in exactly? Well, looking at the asset allocation, it was heavily invested in equity securities, making up 100% of its net assets. There was about 1% in cash equivalents and 0% in exchange traded funds. So this fund is all about stocks. Drilling down into the sectors, information technology was the largest holding at 34%. Financials came in second at 21%, followed by industrials at 20%. Consumer discretionary was 10%, communication services was 7%, consumer staples was 4%, materials was 3%, and healthcare was 1%. This shows a strong tilt towards technology and industrial companies. Geographically, Korea was the largest exposure at 24%. Taiwan was close behind at 22%, and China made up 16%. Brazil had 8%, India 7%, Hong Kong 6%, and Turkey 5%. South Africa, the United Kingdom, and the Netherlands had smaller portions. This highlights the fund's focus on Asian emerging markets, with a notable presence in Korea and Taiwan. Let's talk about the top 10 holdings. These are the biggest bets the fund managers are making. The top holding by a significant margin is Taiwan Semiconductor Manufacturing Company Limited, which makes up 17.3% of the fund's net assets. Then we have SK Square Company Limited at 6%. Tencent Holdings Limited at 4.6% and SK Hynix Inc. at 4.5%. Asta Transformator Energy Tourism Insaat Veprol Sanayi Ticaret, as from Turkey, is next at 4.1%. Samsung Electronics Company Limited is at 3.7%. Alibaba Group Holding Limited at 2.9%, Contemporary Amperex Technology Company Limited at 2.6%, Capitec Bank Holdings Limited from South Africa at 2.4%, and Nora Technology Group Company Limited from China at 2.2%. Looking at the official investment portfolio, we can see the details of these holdings. For example, in Brazil, they have significant stakes in Anima Holding SA, Banco BTG Pactual SA, and Banco do Brasil SA. In China, besides Tencent and Alibaba, they hold Contemporary Amperex Technology Company Limited and Nora Technology Group Company Limited the major chunk. In Taiwan is indeed Taiwan Semiconductor Manufacturing Company Limited with around $12.6 million invested. In Korea, SK Hynix Inc. and SK Square Company Limited are the largest positions. Now, let's peek at the statement of assets and liabilities as of the 30th of April 2026. The total assets were over $74 million. On the liability side, there were almost $1.9 million in liabilities. This gives us the net assets of over $73 million. The net asset value per S-share varies a bit between the different share classes. For Class A shares, it was $26.80. Class C shares were at $23.78. Class R6 shares were at $27.8. Class R6 shares were at $27.08. Class S shares were at $27.15. And institutional class shares were at $27.17. The differences primarily reflect the varying expense structures of each share class. The statement of operations for the 6 months ended the 30th of April 2026 shows us the fund's income and expenses. Total income was over $415,000, mainly from dividends. Expenses were around $333,000 after reductions. This resulted in net investment income of about $81,000 for the period. The fund also had a net realized gain of over $5 million from investments. This is a significant number, showing that the fund managers were able to sell some holdings at a profit. The change in net unrealized appreciation was over $7.5 million, meaning the value of the remaining investments went up. Overall, the net gain was over $12.6 million. Leading to a substantial increase in net assets from operations. The statements of changes in net assets show the overall picture. For the 6 months, the net increase in net assets from operations was over $12.7 million. However, there were distributions to shareholders totaling almost $1.9 million, and a net decrease of over $4.1 million from fund share transactions, meaning more money was redeemed than invested. This led to an overall increase in net assets of about $6.7 million for the period. Let's look at the financial highlights for Class A shares. The total return for the 6 months ended the 30th of April 2026 was a strong 20.30%, though this does not include sales charges. The ratio of expenses after reductions was 1.16%. For Class C shares, the total return was 19.82% and the expense ratio was 1.91%. For Class R6 and institutional class shares, the total return was around 20.50% and the expense ratios were about 0.91%. Class S shares had a total return of 20.37% and an expense ratio of 0.99%. Now, diving into the notes to financial statements, the fund is part of DWS International Fund, incorporated, and offers different share classes with varying fees and charges. Investments are valued based on observable prices or, if those aren't available, through models. The fund also engages in securities lending, where it lends out its holdings to earn income. As of the 30th of April 2026, the value of securities on loan was about $851,000, which is 1.2% of net assets. They also noted that investing in emerging markets involves special risks like currency fluctuations, political instability, and less transparency. This section discusses the board's review of the advisory agreements. They looked at the nature and quality of services, fees and expenses, profitability for DEMA, and economies of scale. The board noted that the fund's performance was mixed compared to peers and its benchmark. They also reviewed the fees charged by DEMA and compared them to other similar funds, concluding that the fees were reasonable. The board also considered the profitability of DEMA and felt it was not unreasonable. And finally, the signatures. The report is signed by Hepson Uskin as Principal Executive Officer and Diane Kennelly as Principal Financial Officer. So, what is my take? This fund is heavily invested in emerging markets, which offers the potential for high growth but also comes with significant risks. The top holdings are concentrated in tech giants like Taiwan Semiconductor and Tencent, and there is a strong geographical focus on Korea and Taiwan. While the recent performance looks good, the report flags underperformance against benchmarks in longer timeframes. The key risk here is the inherent volatility and risks associated with emerging markets, and investors need to be comfortable with that. My biggest concern going forward will be how well the fund navigates these emerging market risks while chasing growth. That is my take. Stay decoded. Want to know what stock screeners and charting tools I use? They are linked in the description below. That is my take. Stay decoded. If you found this analysis helpful, please hit the like button and subscribe for more.